Hi, welcome to the Market Alert for Wednesday the 15th of April 2015. Just before we get into the Market Alert, a quick thank you to all of you who've written to me and emailed saying how much you're enjoying the PPT course and how much you're enjoying the profits that you're making from it as well. Feel free to get in touch. It's not just a one-way process, this. More than happy to review or look at anything else that you want in the Market Alert as well. So please feel free to get in touch. You can do that from the support tab in the members section of the website. Okay, let's take a look at yesterday's price action. We can see the market finding support in the pre-market session there around the 17,950. The market then trading through the 18,000 level all the way up towards the 18,050, but failing to get there, and then coming all the way back down and stopping at the 17,900. So we've got a drop there of around 140 points. So this big drop off here is an indication that the market is likely to find a bounce, which it does at the 17,900 level. Then goes up, comes back down. The market is tested here where you see this blue test, so the market's opened, price is forced down and come back, and you can see the increase in volume there as well. The market then starts to move higher on low volume, and we get this PTI to the downside, and the market fills the order, but the market in the background has already had a 150 point loss. It's very difficult for the market to continue on down unless there's any bad news, but we'd already had the news out for the day. There was only the one economic news item yesterday, and therefore we see the market coming back and then closing back. And it's a shame we didn't get a signal on this one, and the only reason is this is 27 points in range, and the settings for the PTIs are 25. So we've just missed this one by 2 points. And then we see the market then moving back and trading all the way back up to the 18,051 level, which is just bad luck, really. That, like I say, there's just 2 points too many in this one, 2 points less, and we would have had a signal there and made up the loss in the first trade there. Later on in the session, we see the market struggling with the 18,050 level. We then get a triple X, and we see this trading down towards the 20 point target there just before sort of mid session, before the market finds some support and then starts to move higher there. You'll also notice in this as well, it's very important, if I just put on the crosshairs and then move back to the chart. And there we go. You can see in this price bar here, we've got a selling bar. The market's moving lower, hits the scalp target, and you can see the volume there is 109 at the top. In the next bar, the market reverses. The range of the bar is less, but the volume is only one tick less. So when you're looking at the market on a bar by bar basis, you can see that in this bar here, to drive lower was 108 ticks of volume, and then the market puts in 108 and doesn't move lower. There is a massive clue there that the market is finding support, and it's one of the sort of nuances of looking at each price bar, especially around scalp areas, through the target, through the psychological levels as well. So you can read the market on a bar by bar basis, and there the clue is in the volume, 108 as opposed to 109, and the market reversing there. So there's a clue there. So once you get used to this, you can then actually sort of predict what the market is likely to do. So there's the 20 point scalp hit there, and then we see the market finding support immediately as the market hits it. The last two signals are too late in the trading session. We're heading towards 8:30 there, and then of course this one that went down to the target price was 2100 on the last bar there. So if you had traded these, there's another potential loss there and then making up there, but it's half an hour before is really too late, because the market can just trade sideways or drift, and then you end up giving the profits away. And probably another reason there why, along with that increase in volume, why it's may have been an idea to have actually taken the profits. But had you not, you certainly got a break-even situation as the market comes back there. In the daily charts, you can see yesterday most of the activity was played out before the market opened. We see the market then trading up, coming back down, and then opening up, going back down, and then coming back up. And again, you can see the market struggling with this 18,050 level. It's also a 76%. We've not actually closed above this all week. In fact, since Friday last, where the market actually traded to it and has stopped, and then we see how the market's come back since. So the market really struggling with this area. So if you are a buyer in this market, you can see in this area here, the 18,050, that the market went through, and then this adds a bit more weight to the sell signal there because of what's in the daily chart here as well. Even on the overnight, the market is struggling with this too. In the news, let's just get rid of this and have a look at the news. We've got after 2:30 the NAHB housing market index and then crude oil. So neither of these should really affect the market, apart from the housing market index is forecast to be higher by 2 points. So if there's nothing else around, the traders may use this just to mark the market up and have an attack on that to 18,050 level. Finally, in the implied volatility, 1231 for yesterday, down slightly as you can see from the chart there. So again, even though the market opened and moved 140 points lower to begin with, the option sellers didn't see this as too much of a risk, and the prices of the options, the implied volatility component, was actually marked down. So again, still indicating that the market wants to move to the upside. Right, that's it from me this morning. I will see you in tomorrow's edition of the Market Alert. Have a good day. As ever, thank you for your support, very much appreciated, and also for watching. See you in the next one.